What's going on, people? Ronnie Speed coming back, of course. So today's video is going to be about taxes and tax advice. So I've seen a few comments, people asking tax advice, should they get a car? Just a few other questions. So I took it upon myself to schedule a meeting with my CPA. Do a quick interview, ask them some tax questions. That way I could provide you guys with some type of value, some type of insight on how you guys should file taxes, save for taxes, structure your taxes, and also maybe a resource if you guys want to hire a CPA. I highly recommend doing that. That way you don't have to get in any tax trouble, because it can be funky trying to file taxes by yourself, especially doing like Uber or any type of gig share work. So yeah, man, enough talking. I hope y'all enjoy the interview. I will put the CPA, his name is Max, I will put his information in the description below. So enjoy the video. If you have any other comments, you could comment on the video or reach out to me or the CPA Max himself. I'll advise reaching out to him because he's a professional and he can answer questions better than I can. But, enough talking. Hope y'all enjoyed the video. Holla back. Peace. Okay, all right. First question for you.
Okay, all right, let's do it.
Why should people hire a CPA?
Well, if you're a driver and you're self-employed, you definitely should hire a CPA because it's all kinds of credits and deductions that you won't be able to take advantage of normally on your own, especially if you have something like you bought a new car and are you going to take standard mileage or deduct your car? That's like a big decision and a calculation right there, whether you're going to take the standard deductions or the actual expenses. And I think we've been talking about that a little bit recently with your situation.
Okay. Real quick, can you tell people what exactly a CPA stands for and what does it mean?
Okay, great question. So CPA stands for Certified Public Accountant. And what that means is that I'm legally allowed to represent my clients before the IRS if you need to negotiate or if you have any kind of audit. Also, typically you need about 5 years of schooling to qualify to sit for the CPA exam. And it's a pretty rigorous exam that only about 20% of the people who sit for are able to pass all 4 parts of it. So it just kind of certifies that, hey, this guy is a high enough caliber to be able to handle these types of issues.
So if people wanted to hire you, and I'm pretty sure that they're curious and want to know, okay, so if I wanted to hire him, what makes him a good fit for me and what makes him, like, pretty much the benefits that they would have from hiring you and using your services?
All right, that's a good question, Ronnie. So, for me, personally, right now this year we're launching a program called the Trusted Client Program, and what it's going to be is people are going to be like on a monthly payment. So instead of paying just one big tax bill and one accountant fee, they're going to pay me over a 1-year period. And during that time, we're going to build a relationship with you or our clients, and we're going to do your taxes. We'll probably meet for about an hour and we do that. We'll have like a little bit of half-hour recap, maybe about a month later. And we'll be asking you, what are your concerns? A lot of people don't realize or maybe aren't thinking about that taxes and retirement are kind of intimately related. The government's trying to encourage you to work on your retirement, and they give you all kinds of tax breaks. So we'll talk about that sort of thing. Another thing is at the end of the year, if you don't pay in enough, you're going to end up owing. And if you pay in too much, you'll get a refund. So we try to meet with our clients around October to see if you've overpaid or haven't paid enough. And then you'll have 6 months between October and April to plan out whether or not you should be saving up to pay the IRS or if you'll be expecting a refund. And around the holidays, it's good to know what you're going to expect come New Year.
Ooh, I just thought of a question. This is going to be a good one. So for the people that's in other states, are you able to do their taxes or are you only certified in California?
Great question. Well, as a CPA, I'm licensed in California, and they have reciprocation among the other states. Typically, I can do that, but I'm also an enrolled agent. And an enrolled agent's a national credential, so I can do it for all 50 states with my credentials.
So for the people who are gig workers, Uber drivers, Lyft drivers, DoorDash, Grubhub, and all the other gig work, what exactly can they write off?
Okay, that's a great question. So, in your particular case, it's been interesting because you're promoting the services on YouTube, and you got some camera equipment, some home office, things like that. Those are things that are special to your service. But the normal people, we're going to be looking at what's your mileage expenses. Also can look at if you do use a computer to set up your accounts, if you do have your phone, your internet, things like that that you actually need for working. People oftentimes overlook those items. There's also care and maintenance of your car, the car washes, different things like that. I believe those are some of the main things. I got my man Bob here in the background. Anything else we are forgetting to mention here?
There's a home office tax deduction.
Okay, I think we mentioned that a little bit.
Yeah, that's all I can think of. Meals, we got meals.
Oh yeah, there's also if you're working meals, if you going from place to place and you're on the road, you can't eat at home. That can be a significant deduction if you're having like one or two meals on your shift, especially you're working these long shifts. So that adds up.
Okay, I've been getting this question a lot. I got new drivers coming in. They're excited, but they also want to know they're thinking about buying a new vehicle. So let's say they buy either a new vehicle or a used vehicle. Are they able to write that off as a tax expense, or how exactly does that work?
Great question. So we were just talking to another client recently, and if you got a commercial grade vehicle that's I think 6,000 pounds or more, which would be more like a van or something like that, you could actually take up to 100% of the cost of the van that first year that you purchase it. It's called the Section 179 deduction. Typically, if you buy an older car and it's not worth a lot, you'll be better going with the standard mileage deduction. If you buy a newer car and it's worth a lot, you can opt to use the actual vehicle expenses. Now, for example, for me, I'm looking to get a new car and I might expense quite a bit of that. If I keep my second car, my old car, which is a Honda, it's 2003, I have that vehicle for use, for personal use. So if I want to claim 100% deduction for a vehicle, make sure that you have a vehicle that you can use for personal use, maybe the old vehicle. It might make it more worth it to retain that if you're buying another vehicle that you're going to exclusively use for your business and you want to get a good tax deduction.
Okay. Oh, next question. Let's say they were to buy a new vehicle, or they have a company, or they have like an idea, and they wanted to form like a LLC or S corp. Like, what is the advantages of doing that, and how exactly does that help with taxes? So if I have like an LLC and I want to purchase a vehicle, should I buy the vehicle under the LLC or make my expenses under the LLC or S corp?
Okay, that's a great question. So a lot of times people will form an LLC. It's a limited liability company, and you can choose which tax structure you want. And an LLC can actually make 4 different tax elections. And an S corp is one of the tax elections you can make, and you can actually form a corporation. So without getting into too much details, that would be like an hour conversation. If you want to keep your assets in a corporation and you're building something in the corp, that's going to be supposedly like your YouTube channel, and it starts generating a lot of income from the click-through ad revenue, for example, that all becomes subject to a self-employment tax. Now, if you have a corporation, you can actually pay yourself a paycheck, and that paycheck's going to be subject to employment taxes. But some of the income you can say is based on the investment that you've made in the company. So it's like a return, like you're just like getting a distribution as if you invested in the stock market or something like that. It won't be subject to that self-employment tax. So you can save yourself about 15% by categorizing some of it as investment income and getting a paycheck for the other income. And supposing you had $120,000 you made, if $60,000 was due to investment income, that could end up being like $10,000 in self-employment taxes that you were able to avoid through structuring your company. So when you start making good money on an idea, sometimes it makes a lot of sense in saving money to have an S Corp or an LLC.
Should people pay quarterly taxes, or should they just pay once a year? Or like, what are the benefits of paying quarterly compared to just paying once? And are there any penalties if you only pay once?
Okay, that's a great question. So if you're self-employed and you're not getting a regular paycheck, you should pay quarterly, because the IRS is going to determine that as you earn the money, you should be paying it in. Now, if you owe less than $1,000 at the end of the year and you didn't make that much money, then it's not a problem. But you definitely want to be within that $1,000 mark. Another thing could be if you paid in at least as much money as you paid in last year, by the time it comes due, there's also a safe harbor provision. So without getting into too much detail, we could look at your situation if you have a specific question. But another way could be if you have a regular job and you're working for the gig economy, you can do all your withholdings towards the end of the year, where they withhold like a large amount from the last part of your year's paycheck. And the IRS, if it's through a W-2 withholding, they'll consider that paid timely, even if it was all paid at the end of the year, as long as it's through withholding. So for people who work the gig economy and have a regular job, if it comes at the year end and you realize you have a large tax liability and you want to avoid the underpayment penalty throughout the year, or the late payment penalty, we can work with your employer to adjust your W-2 wages so that the withholding and the payment comes through your year-end payments from your regular job.
Next question.
Okay.
What if people, because last year was a funky year, bad year for most people. So what if people didn't file their taxes from last year or previous years prior to that? What exactly should they do, and what should they be conscious of as far as penalties?
All right, thanks, Ronnie. That's a good question. So if you owe money to IRS, typically the interest that you owe, they'll charge you like a certain interest rate and you're back on your taxes. Usually that's not going to get forgiven. But if you're just back for 1 year and you missed the October 15 extension, or you didn't file an extension, those penalties can really start adding up for a late filing penalty. And they can even go up to about 25%. However, if you've only missed 1 year, a lot of times you can qualify for the first time penalty abatement, and usually the IRS will grant that. So it's just a question of being able to make that phone call or file that form or ask the IRS for that penalty abatement. Now that's assuming the previous few years you've been in good standing. Now if you're a chronic offender, delinquent with your taxes, then you're looking at maybe hiring a professional to help you abate those penalties. If you do owe a large amount, there's 5 different situations that you can get into if you can't pay the amount in full immediately. We could do a short-term payment plan, which oftentimes you can apply for directly through the IRS website. There could be a longer-term payment plan where you have to substantiate your cost of living expenses and why you need that longer-term payment plan available. It could go up to 6 years. And then if you don't think that you can pay the amount that you owe, the IRS has 10 years to collect the money on you. So you could owe $1 million, and they've got 10 years after they've been notified of your tax liability to collect on you. So if you owe $10 million and you, for 10 years you made nothing, there could be a chance that you could be in a status called currently not collectible. And after 10 years, you can make $1 million, and that old tax liability will actually just fall off the map. So some people are in a situation where they can't make any money because it's all going to be collected by the IRS, and they're thinking, well, maybe I'll just have to go on, wait this through. There's also, for people who can't pay it all, but they are making money and they want to do the right thing and pay back as much as possible, there's a partial payment installment plan where the IRS will negotiate with you. They'll allow you to have your living expenses, but then you're paying a partial amount. The IRS knows that if you kept paying that for the entire 10 years, they wouldn't be paid in full, but they'll accept it because they calculate that's the best you can do. That a partial payment will be up for review every 2 years to see where you're at. Currently not collectibles, typically every 6 months. They'll want to review your situation. And then one of the other options they have is an offer and compromise, which you would need a CPA or tax attorney. That's when you have a large amount of tax owed and you want to make an offer, say, can I pay a partial amount? Typically, the CPA or attorney working with you has to convince the IRS that it's in their interest to take that offer. So offer and compromise is a compromise that the IRS agrees to because they don't think they'll be able to collect much on you, and you want to get the IRS off your back. When you do an offer and compromise, if the IRS accepts it, you have to be in perfect standing for the next 5 years. That means pay all your taxes on time that you're currently owing for the current year, and also have all your filings in for 5 years. So you have to be kind of like Snow White or Mr. Clean or something like that, whatever term works, to make sure that that goes through. But that's some of the situations that I've been able to deal with, and I do have a specialty in dealing with people with severe tax problems. So if you do have a severe tax problem, feel free to hit me up.
Next question. What if the IRS garnish your wages?
Great. So if the IRS garnishes your wages, they can garnish up to 25% of your wages. And if you're not able to meet your living expenses, you can appeal that, and you could ask for that to be reduced. You can also try to negotiate one of those payment plans that we talked about earlier, where you go into a voluntary payment plan. A lot of times people having a voluntary payment plan also can save them a lot of embarrassment with the workers in their employment situation, where they don't want their boss to know that they're delinquent on taxes. Some people consider that to be a reflection of their moral character or their ethics, so they might not want their employer to hear about that. So it's in their interest to definitely negotiate a payment plan if they're concerned about that sort of thing.
Can you buy clothes for your business? Or how exactly does that work?
That's a great question, Ronnie. And I know that you're considering a clothing line, if I can mention that. So in your particular case, if you're actually coming out with a clothing line, we'll look into that. Probably some of your stuff could be put down for advertising. But normally for somebody, you can only write off your clothes if it's something that's only suitable to wear in the workforce. So say if you worked at one of those places where you had to wear like a hot dog uniform or something like that, you're going to assume that you're not wearing that on your free time. But a lot of times people in the past, they've been wanting to write off their suits, their GQ, their Armani cuffs or whatever it is. And unfortunately, the IRS has basically disallowed that. But if you're a worker and you had to buy like steel toe boots for the work site, things like that, that could possibly qualify depending on if it's required for your work and you're normally not going to be wearing that outside the work.
Okay, so let's say the people, you may have answered this already, but I'm gonna ask the question anyway.
Okay.
Let's say
sounds
people
great.
do have like a business, LLC, company, whatever. How exactly should they go about paying themselves out of the business?
All right, that's a great question. And that's a question a lot of people have a confusion about. Is that an expense when you pay yourself, or is it not? So if you're an LLC and you pay yourself a wage, it becomes an expense to the company. And then when it flows through to you, there's a form that's generally called a K-1 that'll come through to you depending on the setup of your company. And it'll make the income on that K-1, that's the investment income, less. But then you also have to record your income on the personal level. So that's kind of a real tricky thing, but we can find a way to maximize it so it gives you the best benefit. Now, one thing that could be great is if you're a self-employed person, you can start to set up retirement plans, things like that. And setting up a corporation or an LLC can give you certain advantages on trying to find an appropriate plan for your company. You can also do it on the personal level. So what was the question exactly again? What are the advantages?
Yeah, like how can people pay themselves out of like a business, like a salary?
Okay. If you set up a paycheck for yourself, it becomes very clear what's going to be subject to self-employment tax and what's not. If you don't set up a paycheck once a year, the government will consider that to all be like self-employment. Now, you can easily have a check made out to yourself and you can go and cash that check. Or you can have the bank accounts linked, but you'll want to show what's a distribution and what's a paycheck, for example. And it's getting a little bit more complicated. Usually that's about a 20-minute conversation I have with people to get them clear on that idea. So feel free to hit me up if you have questions about that.
Under what circumstances should people get a tax ID number compared to using their social security number?
That's a great question. Now, a lot of people, they might be concerned about, okay, I have to give out an ID number, or I have to give out a tax number. People are always asking that for one thing or another. So as an individual, if you have a sole proprietorship, which just means you're working for yourself, it's very easy to go to the IRS and get a tax ID number. In fact, it only takes about 5 minutes typically going through a little questionnaire. You can use a tax ID number. One of the main reasons is maybe you don't want to give out your social security number to other people because you're worried about identity theft. If you incorporate or become an LLC, you'll want to get a tax ID number for that business because that's actually a separate entity from yourself, and you'll need to use that number to set up your bank accounts and things like that. So if you have an LLC and you need to set up a bank account, you definitely need to get an EIN number, but it's super easy.
Let's say people wanted to save towards retirement. Are you able to help them with IRAs or like any other type of investment instruments? Do you do that exactly, or?
Yeah, that's a great question. A lot of times when people are starting off in their investment journey, I'll just ask them, hey, which bank are you banking at? If they're banking at a bank that offers brokerage, sometimes it's really easy just to set up an IRA or a Roth IRA, and we could talk about the advantages of those, which one's more suitable, going directly through the bank. If they want to do more than the limit, which is about $7,000 this year for most people, and they want to get into doing maybe like $18,000 or on upwards of that, there's different retirement plans that allow them different amounts. So a simple IRA can be one where they can greatly increase their contribution and it's pretty easy to set up. The main thing you need to worry about with these retirement accounts is if it's in a retirement account, the money will be locked up until you're at retirement age, which is 59 and a half. If you take out the money earlier from many of them, there could be a 10% penalty, especially for a regular IRA or a Roth IRA. If you set up a simple IRA, which allows you to contribute more, they've got a special penalty that within the first 2 years that it's set up, you'd actually get a 25% penalty for taking your money out. So it is important to do some planning, and a lot of times I do talk with people about what are their goals for their money and what do they want to save for. And we can figure out if you want to put it in a regular brokerage account or if you want to put it in an IRA or retirement account, depending on what you're going to do with that money.
Because I know a lot of people will try to do like some tricky stuff to save money on like taxes. What if okay, let's say if I live in California and I wanted to have like a brand, but I wanted to register it in another state like Texas or Nevada or Florida just to save on taxes. Like, is that possible, or would you recommend that?
That's a great question. That I come across that situation quite often, where maybe somebody's talked to an attorney and for some reason the attorney says, oh, let's incorporate in Delaware, let's incorporate in Nevada. So what the IRS will look at and what the states will look at is, are you operating in that state? So if you got a Nevada corporation but all your operations are happening in California, California requires you to register as a foreign corporation, and you actually become subject to all the taxes and form filings that are due in California, and then you also have to do it in Nevada and these other places, or even Delaware, for example. And a lot of times there can be actually significantly more tax headaches for form filing and for annual fees that really don't make sense. And for some reason, people just set it up on autopilot. They think they're doing the right thing, but it really ends up being a mess. And I have to decide when I advise them, is it better to unwind the old one and close it out and just open a new one in California? Or is the situation where they want to keep both going? But a lot of times it's like I'm just thinking, oh my gosh, I wish they would have talked to me before they'd done that.
All right. I think we pretty much. I have one last question for all the people out there who are kind of like doubting, hiring a professional accountant. That say, oh, I can just do my own taxes on like TurboTax or another online tool. Why should they just hire an accountant if they could do it themselves?
That's a great question. Some people will ask for a consultation, a free consult, to see if it'll be to their advantage. If an accountant can do your taxes and it costs $500 to pay that accountant, and you realize that they're going to find $5,000 of savings, then the net $5,000 savings minus the $500 fee is $4,500. That could be a reason. So maybe you get a better deal on your taxes when the person works with you. Another thing is peace of mind. People wonder if it's done right, or if they miss something, who's the IRS going to talk to? The IRS will look to see if your taxes were done professionally, and they would consider that they're thinking that that person, that CPA, is probably going to be having a pretty good understanding of the tax law code, hopefully vetting some of the information before they put it on the return. And lastly, some people just don't even want to look at the tax software. They don't even want to try to understand it. So they say, hey, I'll pay somebody $500 rather than spend 20 hours researching it myself. So it's a good value to have somebody do that.
All right, well, I think that's all the questions that we have so far. So can you please tell the audience where exactly they can find you, what links you have, and how can they get in touch with you?
Well, thanks. So I'll tell you what, if you want to get in touch with me, I am on LinkedIn. I'm also on Alignable, and look for Magnum Drew, MagnumDrew. That's my name. And then my website is Magnum CPA, www.magnumcpa.com. You can email me directly at max, M-A-X, at magnumcpa.com. Also, feel free to contact me via phone or text, 707-320-1040. That's 1040, like your tax form. And if you mention that you're a friend of Ronnie's, I'll give you a special discount. So feel free to put that in the email.
All right. So that's pretty much all the questions. If y'all have any other questions, y'all can get in contact with me and I can give you his information. I will definitely have the links to Max in the description. So yeah, don't try to do your taxes yourself because more than likely you're gonna screw something up. So hire a professional so you don't have to get yourself in tax trouble. And yeah, that's pretty much it. Peace.
All right, thanks a lot.
60 hours.